Hi, welcome to the Market Alert for Monday the 13th of June 2016. So Friday session, we saw the market open and trade sideways before we had the consumer figures released at 3 p.m, which is this losing trade here. You can see the market moving down initially on the figures, and then the market reversing, putting in a buy signal, and then reversing this trade. So we've got the entry price for the short minus the entry price for the buy signal there, giving a net loss there of 20 points. The market then moves higher, and just to come back to this, that's if you actually traded through the high impact news items. Some traders do, some traders don't, depending on the severity of the high impact news item. Even though all high impact news items tend to move the market, some are of a higher impact, I suppose, really, like the FOMC, the non-farm payrolls, those types, and the GDP forecasts. The consumer sentiment ones tend not to be, and some people do still like to trade those. So that's what actually happened there. I'll show you that in real time shortly, when we have a look at the first trade of the evening session, which I recorded and show in the video how to actually move the trailing stop and why you would do that as well. So then we see the market driving higher, and again we see the price drive through the scalp, which is the trigger for actually being able to trail the stop underneath the rising lows, and then we get a rising low here, you can see there, and the market then takes this trade out for a profit of 33 points. We then get another buy signal, and taking this buy signal resulted in a 24-point loss as the market reversed and then came back. Couldn't hold above the 17,900 level, the 18,000 not holding at all, as prices had already moved back 100 points. We then had this sell signal, and I'm just going to switch, and there we have the sell signal. The market filled the signal, and then prices began to move lower. So I'm just going to wind this back a bit so you can see the trade initially. So we've got prices opening for the evening session. I'll just bring this back just slightly. There we go. So you can see the market going through the entry price and then heading for the scalp, and as prices go through there, they start to drive through, and then you'll see the big bar driving through the resistance and support there at 17,850, and after this point we get another sell signal, but we're already short, and then the market continues to move lower. So what I've done at this point is move the stop to break even. The scalp is still in there in case the market comes back, and then prices trade sideways. Now it's left a lower high behind. I'm actually starting to put in a 50% extension using the extension tool. So the market then trades sideways again. Give it a chance to breathe a bit, and you can see me just play this in real time, just changing the stop there and then removing the previous one. The market trades sideways again before moving lower, and again you'll see me move the stop, and then the market comes back and takes out the trade for 57 points, giving just over 40 points net for the whole of the trading session for Friday there out of all of those trades. In the daily chart, we've got an interesting picture. The market's looking weak, and the reasons for this at the moment are that the Brexit polls are showing an 11-point lead, and there's been a big sell-off in Japan on the overnight market, so the Dow has actually gapped lower, and I will show you this in the 5-minute chart there. You can see the market gap lower and has been trading, holding at the 17,800 level at the moment. Again, Wednesday is the big day, but anything at the moment to move the market, it's news driven, and who knows that we've only got 2 days before the FOMC. If they want to drive the market lower to justify printing more money, they will do that. So who knows what could happen in the next 2 days before we get in my opinion, no increase in interest rates, and then after the party really starts. But in the daily chart, the market's gap lower, and we can see there that prices seem to have topped out at the moment, unless we get a straight reversal. But certainly low volumes, nothing around at the moment. And again, we know the reason for that. I'm not going to keep repeating it. You all know why. News-wise today, I don't think we've got anything. We've got President Weidman speaking at 8 a.m. So that's all there is for today. So the market, as it's news driven at the moment, doesn't have any news, so it could be sideways and quiet, unless of course something comes out of nowhere that sends the market or it gets some momentum behind it. Big sell orders hit the market with traders wanting to get out before Wednesday. Who knows? But generally no news, no movement is the case at this time. The implied volatility is aware of this as well. This has been marked up sharply from Friday. We're starting to see some movement now in this as well. So, like I say, we are on the cusp of a major correction in this market. Be very surprised if we don't get it. I wouldn't also, as I said in Friday's market, I wouldn't be surprised to see a bit of a rally first if there's a relief rally, as Yellen says no. But from Thursday, Friday onwards, then I would imagine that we start falling apart. So that's the cheery news for this morning. I will see you in tomorrow's, unless I report in later today. But other than that, have a great day, and as ever, thanks for watching. See you in the next one.